Good afternoon. Good afternoon. Welcome to a new weekly Wednesday webinar. The weather's getting warm. The trees are getting greener. We're so excited to learn new topics this, summer season, even though it's a couple weeks away. But we're excited about the new topics that we will cover this summer. My name is Eddie Villanueva. I'm the official MC of the weekly Wednesday webinars. Please make sure that you interact with us throughout this presentation. Send your comments, send your questions using the chat, the Q&A feature, or if you just want to say hi, please make sure that you write something to us. We appreciate it. I did wanted to share a quote with you all this afternoon, and the quote goes, "The future belongs to those who believe in the beauty of their dreams." Many of us have many dreams, many goals that we want to accomplish. And I believe that getting a home is one of those dreams that perhaps all of us have. Some of us perhaps already accomplished that. And, we're trying to get into maybe more property, or some of us are looking for our first time home. So we're going to go through the Closing Docs 101, understanding your mortgage paperwork. I know that when you talk about mortgages, and closing docs, sometimes it can be a little bit overwhelming, it can be a little bit scary, but that's the reason why we have the experts this afternoon to explain every single document that you will be signing at closing. Once again, thank you very much for being here with us, and best believe that the United States Senate Federal Credit Union, we care about your financial goals and dreams. And if your dream is to get a home, please make sure that you help us build the path for you to reach that goal. So thank you very much for being here with us. And I want to give a special shout out to somebody that's very close to me. She's part of the marketing team and she's on the attendee list. So Gretchen, thank you for being here with us. We appreciate you. Thank you so much. We know that you're very busy, but hey, you decided to spend your afternoon on this very beautiful Wednesday with us. So thank you very much. Also, I see a lot of, names that we have seen before. So thank you very much for being here with us. Oh, and one more name that I wanted to mention. Miss Angie from the lending department is in the attendee list as well. So Angie, thank you very much for your support. Time flies when you're the MC. I only get 2 minutes, so 6:02. It's time for me to pass the mic to our membership analyst, Kim Friedley, with the introductions. Kim, please take it away.
Thank you so much, Eddie and team. It's so awesome to have our attendees on this call this evening. Thank you for joining us. We are so excited. We have members who live all over the U.S., and we don't ever want you to not think about us for your mortgages because you wonder, how in the world would this happen with me living so far away from the U.S. Senate branches? So that's why we're having this webinar this evening. It's going to help you be more familiar with how we actually close mortgage loans. So with that being said, I just want to, Eddie's already told you who he is. He's from the marketing department. We also have from our marketing department, if you've been on these webinars before, you know Carrie. She is our content creator queen. We could never do these webinars without her. So thank you, Carrie, for all that you do. We also have from our marketing department, Andrea. Andrea is a valuable part of the marketing department, and we're so honored to have her on the call as well. We also have from the membership development department, we have, I should have said I'm Kim Friedley from the membership development department. And we have Milton, who is my leader. He's amazing. He has a wealth of knowledge in banking and in the credit union industry. So welcome, Milton. And then we have, like Eddie said, our subject matter experts on closing docs on mortgages. We have Kim Ta, who is a senior mortgage loan officer. We are so excited to have Kim on the call. She has a wealth of knowledge. So please feel free to ask questions. We'll answer all of those live at the end. And we also have an amazing colleague of mine, Kelly, and she is the real estate lending manager. So I am going to turn it over to you, Kim. So take it away.
Well, thank you, Kim. Hi, everyone, and thank you for joining us today. as mentioned, my name is Kim Ta, and I am the Senior Mortgage Loan Officer here at the USSFCU. I've worked in the lending industry for over 20 years, and I'm excited to walk you through what can often feel like one of the most overwhelming parts of home buying process, the paperwork. Today's session is all about helping you understand the key documents you will encounter at closing, especially the closing disclosure, which breaks down the final terms and costs for your loan. Next slide, please. Okay. Why mortgage paper matters. To avoid unexpected costs, catch errors early, know exactly what you're agreeing to, close with confidence. The document, reviewing, paperwork carefully, you can, avoid all of these mishaps. Next slide, please. As we get closer to closing, two of the most important documents you will receive are the loan estimate and the closing disclosure. While they may look similar, they serve different purposes, and understanding both is key to knowing what you're committing to. Let's walk through the differences. The loan estimate is provided early in the process. We typically you typically receive the loan estimate within 3 days of applying for the mortgage. And it gives you some snapshots of the expected terms, rates, closing costs. But these numbers can still change as you move through the underwriting and negotiations. The closing disclosures, on the other hand, is the final versions you will receive at least 3 business days before closing. And it reflects the actual loan amount and the final cost breakdown. And the business day does include Saturday as well. There are a few other key differences. The closing disclosures includes a detailed summary of the full transactions, which the loan estimate does not. It lists more parties involved, like the seller, the listing agent, the title company, while the loan estimate focuses mainly on you and your lender. And finally, the closing disclosures will confirm if the escrow account is being set up for your taxes and insurance, which the loan estimate may not always clarify. The bottom line is the closing disclosure is to confirm everything you were told up front. It's yours final opportunity to catch any discrepancy before you sign the document. Now let's take a closer look at the closing disclosure itself. This is the document that provides the final detail about your mortgage loan. It's typically 5 pages long, and it covers everything from your loan terms to the exact amount of cash you will need to bring to closing. You will receive this form at least 3 business days before your scheduled closing date, giving you time to review and ask questions. Here are the closing disclosures. Here's what the closing disclosure includes: your loan terms, and key disclosure, the breakdown of your closing costs, a detailed summary of the estimated monthly payment, your cash to close, how much you will need at settlement table, a page dedicated to loan calculations, including your APR and your total interest pay over the life of the loan, sections with other disclosure and conditions that may apply, and finally, contact information for all the parties involved, lenders, settlement agents, and more. We're going through this document page by page in just a moment, but I want to emphasize this. If something doesn't match what you expected, this is your chance to speak up. The closing disclosure is your final opportunity to double check the number before you sign. And typically the closing disclosures works with the settlement agent, a settlement company, so that we make sure that all the figures, all the number match the closing disclosure for the final copy that you will have. Next slide, please. Here's a look at page. Oh, I'm sorry. Can you go back for one second? Kim, thanks. Here's a look at page 1 of the closing disclosures. This page gives you a high-level summary of your loan terms, projected monthly payment, the total amount of cash you will need to bring to closing. Let's highlight a few sections. Loan terms. This section shows the loan amount, the interest rate, the monthly principal and interest. It also clearly states whether those numbers can increase after closing, which in this case they can't. I do want to on the next part, projected payment here we see how your local monthly payment is calculated, including escrow for things like property taxes, homeowner insurance. Even if your principal and interest stays the same, your escrow amount can increase over time. It is important to know that part is variable. Cost of closings at the bottom. You will see your total closing costs and your cash to close, which includes your down payment, fees, and prepay expenses. Let's see. Now let's look at the projected payment section. This part of the closing disclosure helps you understand how your monthly payment is built and how it might change over time. Here's what we see, the principal and interest. This is the fixed portion of your monthly payment and the amount that goes toward repaying the loan and interest. In this example is $27.76. Mortgage insurance, if borrower does not have mortgage insurance, so there's nothing added here, it applied to your loan, it would be listed here. Estimated escrow, this is the portion of your monthly payment that covers property taxes and homeowner insurance. It's estimated here at $479.25 per month. The note below reminds you this amount can increase if taxes or insurance goes up over time. That brings us to the estimate total monthly payment, which adds everything together. And it's total to be $32.55.25 per month. Below that, we get more details on what's included in the escrow estimate. Property taxes, homeowners, other not applicable in this case may be applied in area with things like flood insurance or special assessment, homeowner association fee, or condo fees. This section gives you a clear pictures of what you expect each month beyond just principal and interest. It also reminds you that even fixed rate loan can have slight payment changes due to escrow. Next slide, please. The final section of page 1 is titled Cash at Closing, and this is where we bring everything together to answer 2 key questions. What are your total closing costs? How much cash do you need to bring to the table on closing day? Let's look at each line. Closing costs in this example, the total is $14,383. That amount includes 2 categories: loan costs, which are fees directly associated with getting the loan, like originations or underwriting fees. Other costs, which could include things like title insurance, recording fees, prepay expenses like taxes and insurance. It's also note that there are no lender credit applied here, which could otherwise help reduce out-of-pocket costs. Cash to close, this is the most important number for most buyers. It's $115,554.91 in this case. That's the amount the borrower needs to bring to the closing table, and it includes the down payment, closing costs, and any prepay items. There's a note here that more details are available on page 3, where we will see exactly how the number is calculated. But this summary gives you a quick heads up, so you can be financially prepared for the settlement day. Now that we have seen the summary of the closing costs on page 1, page 2 is the closing cost disclosures, gives us a much more detailed look at those numbers. This is where you'll find line by line breakdown of what makes up your closing costs and organized into a category. There are 2 main sections here. Loan costs, which include things like lender fees and title services. Other costs which include government fees, prepay, initial escrow deposit, and more. You will also notice columns that in the column that show who is paying what and when, whether the borrower pays at closing or before, or whether the seller and another party or another party is covering any part of the closing costs. This full page can look overwhelming at first, but when you break it down by section, it becomes much easier to follow, and that's exactly what we will do next. This section, now let's look at the I must have skipped. Let me see. Now let's move to the second page of the half of the second page, other costs. This section include everything not directly tied to the loan processing, but still essential to finalize the transactions. These are grouped into 4 categories: taxes, prepay, escrow, and other. Section E, taxes and other government fees. This covers charges like recording fee for your deed and mortgage, transfer taxes at the local and state level. In this example, these total $33.17. Section F, prepays. These are upfront payment for things you would be paying on an ongoing basis. Homeowner insurance, typically 1 full year. Daily interest from the day of closing through the end of the month. And here, the total prepay amount is $4,094.08. Section G, initial escrow payments at closing. To start your escrow account, the lender collects a few months' worth of payment for insurance, property taxes. These fund assets are buffer for your lender to pay these bills when they come due. The total here is about $1,437.75. Section H, other. This catch all section can include real estate commission typically paid by the seller, optional or custom items like well, septic tests, or working capital for certain property types. In this case, the borrower has $1,098.31 in this category. Total other costs. At the bottom, you will see a subtotal of section E through H, $9,947.14. That brings us to full amount of other costs, and that the borrower will pay at closing, which tie back to the number we saw on page 1. This section is important because it's include non-negotiable like taxes, but also items that vary by lender, region, and property type. So always review it carefully. At the bottom of page 2, we come to a total closing cost summary. This is where everything we cover so far is added up and clearly laid out. Let's break down what you're seeing here. Section J shows the total amount of borrower is responsible for paying at closing, $14,383.83. This includes both loan costs like origination and title services and other costs like taxes and prepays. The next row gives us a broader total label closing costs subtotal D plus I. You will see that you see what each party is paying, borrower, seller, and any other third-party contribution in this case. Borrower is $14,383, seller is $31,165. Paid by others, maybe builder, agent, or relative, $300. Finally, there's a line for lender's credit, and here is blank. If your lender was offering the credit to offset some of your costs, it would be reflected in this line. These sections make it easy to confirm who's paying what and ensure all negotiation terms like seller contributions are correctly applied. It also helps you prepare for the next part of the document, the cash to close calculation on page 3. Now we look at page 3 of the closing disclosure, which brings together everything we've covered so far. This page has two main parts: the cash to close at the table, the summary of transaction for both buyer and seller. This page gives you side-by-side view of the entire transaction, what you are paying and what the seller is receiving, and how funds are moving on closing day. At the top, the cash to close section. I'm sorry, can we go back the previous slides? I think we are off the slides a little bit. Yeah, I think
So
that's
it
where.
starts with a whole view of that page, and
Yeah.
then just for a summary, and now we break down calculating cash to close.
So you are down at this, okay. This section's on the top of page 3 shows it how the cash to close is calculated. I'm sorry, Carrie. Thank you so much.
Sorry.
It's one of the most important part of the closing disclosures because it tells you exactly how much money you need to bring to settlement. Let's walk through the key rows. Total closing costs. These have been updated from the original loan estimate. The estimate was $16,422, but the final number came in a bit low at $14,383. The yes in the far right column confirms confirms that there was a change. Closing costs paid before closing is still zero, meaning nothing is paid in advance by the borrower. Closing costs financed to zero, so the borrower didn't roll any closing costs into the loan. Down payment funds from borrower remains at $107,000, which is consistent with early pages and likely reflects standard 20% down payment on the property. Deposit, this shows $5,000, which means the borrower already paid this amount as an earnest money deposit early in the process and is being subtracted from the amount due at closing. Adjustment and other credit, this section shows $745.92 credit. That's something that was likely negotiated or adjusted, possibly related to taxes or prepaid costs. These adjustments are detailed in the next sections of the disclosure. And finally, all of this add up to cash to close of $115,554.91, which is slightly lower than the original estimated of $118,422. This chart is useful because it shows where changes occur and reassures the borrower that they're not being asked to bring more money to the table than expected unless there's a documented reason. Let's see. Sorry, Carrie, I think I lost you're on page 3 of the summary.
Yeah, the bottom portion of page 3. So the summary of transactions portion.
Okay, I think I'm here. I thought we'd done this part sections already.
Well, we did a brief overview. I'm sorry, I'm switching sides of the full page, the screenshot of the full page. So now we go into detail of that section where I just kind of broke up. See, we just did calculating cash to close, which is the top part of page 3. And if we move on to the bottom part of page 3, we have the summary of transaction portions. And okay. And you see here the borrower's transactions on this side and the seller's transaction on that side.
Let me see if I can get that slides up on my end too. Give me 1 second. I'm so sorry.
You want me to tell you what slide number it is, just so we know?
Yeah, that would be great. I appreciate that.
You have to get out of slideshow mode. Oh, well, thank you.
I'm sorry. What was the page on the PowerPoint, the slides you are said you're on?
Who said 18? I'll tell you though.
Oh,
16.
16?
Mhm.
Okay. All right. So the second half to page 3. I think it's on 18. No,
Okay. It's 16.
it's
Right?
16. Okay.
Okay.
Thank you so much.
Okay,
I
cool.
think, yeah.
All right, here I go.
Okay, so the second half of page 3, give us a full side-by-side breakdown of how the funds are moving between the buyer and the seller. This section is called the summaries of transactions and is organized into 2 columns. On the left side is the borrower transactions, and the right side is the seller transactions. Let's go over what each columns include. The borrower side, the sections start with listing the purchase price of $535 and the closing costs of $14,383. It then accounts for everything the borrower has already paid or is contributing. $5,000 of deposit already paid early in the process, which also known as the down payment. The loan amount is $428,000 being financed by the credit union. Small adjustment for taxes that have not yet been paid by the seller, for example, county taxes from the earlier in the year. In the end, the calculation at the bottom shows that the borrower owes a total of $549,383. But after subtracting the payment already made, the borrower needs to bring $115,554.91 to closing. Let's look at the seller side. The sections begin with the same sales price of $535, and then from there we subtract the seller's expenses. Closing costs paid by the seller is $31,165. Small tax adjustment for item the seller hasn't paid yet. And after all costs and adjustment, the seller receive a final cash amount equal to $503,089.08. This sections help both parties see exactly how the transactions balances out, and it's helpful for making sure all payments credit and adjustments are accounted for, and that nothing is missing or misapplied before closing. Page 4 of the closing disclosures include important legal and financial disclosure about your loan, why it is not as number heavy as the first few pages. It's important because it outlines your rights and responsibility under the terms of your mortgage. Let's walk through the key sections. Loan disclosure on the left columns, assuming someone else can take over your loan. If you sell or transfer the property, in this case, the answer is no. This loan cannot be assumed by another borrower. A demand feature, it says the loan does not have a demand feature, meaning the lender can't require you to repay the loan in full before it's due unless you default. Late payment, if your payment is more than 15 days late, the lender may charge a late fee of 5% of the monthly principal and interest payment. Negative amortizations, this loan does not include negative amortization, which is good. This means your loan balance will increase due to unpaid interest. Partial payment, the lender does not accept any partial payment. If you pay less than the full amount due, then may return the payment or hold it without applying towards your loan. Security interest, this is the standard clause stating the lender has a legal interest in the home. If you fail to make payments, they can initiate foreclosure proceedings. Escrow account information on the right column. This section confirms whether your loans include an escrow account, which is used to pay things like property taxes and homeowners insurance on your behalf. In this example, the borrower does have an escrow account. The total amount of the escrow property costs over year 1 is estimated to be $5,751. the borrower will make an initial escrow deposit of $1,437.75 at closing. The monthly escrow portion of the mortgage payment is $479.25. This account helps spread those large recurring costs over the year and reduce your risk of missing important payments. There are also explanation of what happens if you choose not to escrow, and you'll be responsible for making those large payments yourself, possibly in one or two lump sum each year. Finally, the note at the bottom reminds you that the property cost can change, which means your escrow payment could also increase. That is something to keep in mind when budgeting long term. In summary, the page 4 may not look like a big deal at the first glance, but it is where your lender outlines the rules and expectation of your loan and confirm how certain responsibility you have, like tax and insurance repayment, will be handled, and it's definitely a page not to skip over. We're on the final page of the closing disclosure. This page covers the final area, how much your loan will cost over time, important legal disclosure, contact information of all parties involved, loan calculations. This section gives you the big picture of your loan. Total payment you will pay over the life of the loan if you follows the schedule over $1 million in this example. Finance charge, closing costs, borrowing and including interest fees of $573,682. Amount financed, the actual loan amount minus prepaid finance charge of $425,678. And then the APR are truly borrowing costs expressed in yearly rate at 6.799%. And then tip would be total interest percentage. This tell you the total interest you pay over the life of the loan as a percentage of the loan amount. Here is 133.532%. Other disclosure in this column highlights things like your right to receive copy of appraisal, foreclosure ability, and the limits, state protections, the fact that refinances isn't guaranteed, a reminder to check with a tax advisor about whether interest is tax deductible. Contact information. This is where you'll find names and number of your lender, real estate agent, settlement company. This page it's helpful to keep on hand after closing in case you have questions down the line. And lastly, the signature line at the bottom is just an acknowledgement. You are confirmed that you received the form, not that you have accepted the loan. In addition to closing disclosure, there are a few other essential documents you sign at closing. These include the promissory notes, which is your promise to repay the loan, the deed of trust or mortgage, which secure the loan with your property, and the escrow disclosure, which outlines how your escrow account will work. And we can take a quick look at each of these next, so you know what to expect and why they matter. Promissory notes is one of the most important documents you sign at closing. It is your formal legal promise to repay the loan. It spelled out the amount you're borrowing, your interest rate, your monthly payment amount, and the repayment schedule. It's also outlined what happened if you fail to make payments. So it is the document worth reading carefully. Essentially, this is the contract between you and your lender that say, I agree to repay this loan under the term listed here. The deed of trust. Next is the deed of trust or in some state, it might be called a mortgage. This is the document that officially secure the loan to the property. It's different from the promissory note. While the note is your personal promise to repay, the deed of trust is what gives the lender the legal right to foreclose if you don't follow through the repayment. This document involves three parties: you, the borrower, the lender, and the neutral third party called a trustee who holds the title to the property until the loan is paid off. In short, the deed of trust protects the lender interest in the property while giving you the right to live in and use it as long as you keep up with the loan terms. Here's an example of initial escrow account disclosure statement, a document you will receive at closing that outlines how your escrow account will be funded and used over the next year. Let me walk you through what this form shows. At the top, the list initial escrow deposit in this example is $1,437.75. Each month is $479.25 will be added to the account from your monthly mortgage payment. The table shows when payment are expected to be made. For example, in December, funds are used to pay the county and township property taxes. And then in May, a large payment is made for hazard insurance. At the bottom, it confirms that your total monthly mortgage payment is $3255.25, which include $2,776 of principal and interest and $479.25 for escrow. It's also mentioned a cushion in this example is $958.50, which your lender sets aside to prevent account from going negative if taxes or increase unexpectedly. This document is just an estimate, but it is helpful for planning and understanding how your taxes and insurance will be handled automatically through the year. I want to quickly highlight a great resources you can refer back to anytime, the Home Loan Toolkit from the Consumer Financial Protections Bureau. This free guide walks you through the entire mortgage process from application to closing and beyond. It breaks down a key term, offers checklists, and provides space to track your numbers and questions. You may receive a copy early in your home buying journey, but if not, you can always download it at the consumerfinance.gov. It's an excellent companion, whether you are the first-time buyer or just a refresher. Before I wrapped up, I want to leave you with a few tips to help make your closing day go as smoothly as possible. Start by reading as much paperwork in advance as you can. The more familiar you are with the document, the fewer surprises you'll face at the table. Make sure your name is consistent across all documents. Spellings matters, and even small differences can delay the process. Keep everyone involved informed, your lender, your agent, your title company. Good communications is key to avoid last-minute issues. And when it comes to sending your closing funds, always confirm the details. Wire fraud is a growing threat in the real estate transactions, and it's taking a few extra steps to verify instructions can protect you from the serious financial loss. And finally, ask questions. If something doesn't make sense, don't be afraid to speak up and ask questions. That's exactly what we are here for. Now that we've touched on those key tips, I'm going to hand over to Kelly, who will share a few important reminders about how to protect yourself from wire transfer fraud. Kelly, it's all you.
Hi, can you hear me?
I can.
Is the auto on? Okay. I'm Kelly Pasilio. I'm the Director of Real Estate Lending for the Credit Union. And thank you, Kim. You did an awesome job presenting this and explaining. I just want to let you all know that, we're always here and we will help you through the process. That's part of the job when you do go with put in a mortgage application with us. Kim touched base at the very end about wire fraud, and that's something that probably your realtor, when you start working with one, if you're going to purchase a home or sell your home, will mention this to you. The title company or attorney, wherever you're going to be doing your settlement, whatever agents are responsible for that, they will make you aware of this also. But this is something that that unfortunately in our tech climate, and this has been going on for several years now, there are people out there that fish through things, and you might get an alert which looks like it's coming from the title company that you've been working with, and it sometimes can be fraud. Somehow they can get into information. This is, just throughout the country. Fortunately, knock wood, I haven't seen an instance with any of ours, but this is something that can happen. And what happens is that these unscrupulous people will somehow get a hold of enough information about your transaction somehow and pretend that they are the closing agent, and they are giving you wire instructions where to send the money for your closing. And this would be the remainder of your down payment and any closing costs. So we're talking, in most cases, thousands and thousands of dollars, sometimes people's life savings. And the wire instructions are bogus. So what you need to do, regardless of whether or not you've talked to your title company, if you get an email with wiring instructions before your closing, you need to call the closing agent just to confirm that it's a correct email. So that's, again, you'll probably get information when you start looking for a home, once you start signing documents, because it can happen, and it's very unfortunate if it does, because once that wire goes out, it's hard to retrieve if it's fraud or an error. So just want you all to be mindful of that. And also too, if you have questions, if something comes up during your transaction, that's what we're here for. That's your loan officer. Want to go over just a little bit of what we offer on First Trust products. We do conventional loans, which are Fannie Freddie guidelines. Normally you can do an ARM, but normally they're fixed rate, 30-year terms. You can also do shorter terms and the rate's a little bit better. We have our government loans, FHA and VA. That's something to consider because the down payments aren't as stringent as they are for conventional loans. And then we also do jumbo products, and jumbo loans are higher priced properties that aren't considered conforming to the market, meaning they cost a little bit more money because there's more risk and there aren't as many investors in the secondary market that will buy those. So, but just to give you an idea, that's what we normally do. And we also do refinancing. If you have a current mortgage, and you need to get cash out, or there's a life change that's going on where you do need to refinance, give us a call, see if we can help you. And again, I just want to say thank you to Kim Ta and the rest of the marketing department and business development, membership development. Thank you so much. Kim is a very well-seasoned loan officer. Like she said, she's been in the business for over 20 years. She's been with the credit union for going on 10. So you're in good hands. And thank you.
Awesome. Thank you so much, Kim and Kelly, for providing all that amazing information. I know that for many people, just looking at the closing documents could be something that will probably put a lot of fear in you, just because, and I'm speaking from a personal experience. I recall when I was handed a package, I almost had a panic attack, if you will, just because it truly is a lot of information to take in. But you know what? Having the right partner with you is what really makes a difference, and that's where Kim and him comes in. Knowing that you have someone with you on your corner that has been doing this for many years, it really adds a lot of peace of mind to everyone. So again, Kim, thank you so much for giving us all that information, and also to Kelly. And then just to emphasize on Kelly's point, the criminal fraudsters are getting more and more advanced now with the different tactics they're using, and we have seen so many cases where people have felt victims of title company fraud. So again, be very, very careful. But with that being said, I'm going to hand it over to Eddie and Andrea to see if there's any questions or comments that you guys received on the chat, and we'll go ahead and read those questions for y'all.
Thank you. The first question is, could you please discuss the role of title insurance and title insurance companies in the real estate purchase process?
The goal of the title company, the role, is for them to do title search for the lender, just make sure that the title is clean and clear, that we can just we can later on use. And I mean, that's the really big, how would I say it, big actions to get done, because you will need the title to be clear in order to put a lien on it again. And then they do a lot of settlement for us. They do settlement for the buyer. They read over they send us the taxes information. They make sure that tell us when it's due, how much to collect. And they protect the buyer, they protect all parties, essentially, is what is in my opinion.
Thank you. And then we have another question. It says, can closing costs be negotiated, and how are they reflected in the paperwork?
The closing costs can be negotiated. We either by negotiating with the seller. They can pay on your behalf. They can you give some portion of the money toward closing costs for you. You can also ask the listing or the listing agent to give you some rebate toward the closing costs. We as a lender, we here at the credit union, sometimes we do promotions to give lenders credit to help with the closing costs, but it is negotiable, but it's more negotiable with the agent and the sellers.
Our next question is, are there any hidden fees or surprises to watch out for in closing documents?
I'm sorry, one more time. Can you repeat that?
Are there any hidden fees or surprises to watch out for in closing documents?
I mean, by the time you get to closing, most of everything that you see on the closing document are the fees. There's no surprises at that particular stage. But definitely you want to review it, and if something, like I said before, if it's different from what you expected at the beginning of the process, then do let us know, and we have to research on that and to correct it for you.
Two comments. Yep, included in the professional that has fiduciary obligations to the leader. Ideally, a real estate attorney, it's like 600 per transaction, well worth it. And real estate purchases made under alliances are surprisingly common and really, really problematic. Ideally, file a copy of US passport and the property.
I'm sorry, was that a question?
No, these are comments, sorry.
Oh, okay. All right.
And
Yes.
then,
Go ahead, Andrew. I'm sorry.
no, Eddie, you can go.
No, so I was gonna say thank you, Mr. Francisco. We appreciate those comments, and I like the fact that he is recommending, to have a professional, somebody that has a fiduciary obligation, ideal real estate attorney, and it's usually the fee that he's sharing is $600 per transaction, and it's well worth it. It sounds like Mr. Francisco is talking for experience, and we love to hear when our members share their own testimonies. So we really, really appreciate that piece of advice. I do have a question on go ahead, Carrie.
Oh, I have a question too. Uh,
Ladies first.
oh, thank you. In the services you can shop for versus the services that you can't shop for, is that worth exploring the services you can shop for to save some money at all?
Yes.
So the buyer should maybe look into how they can find a different, because they come recommended, right? And then I felt like I was just walking through the process thinking that I had to use these people
Mhm.
until I looked closer and realized, oh, I could have shopped and I wondered if I could save some money.
Yeah, buyers always have the prerogative to pick their settlement company and, closer. But most of the time the agents will recommend someone and the buyer typically go with that, whatever the recommended settlement company. But definitely you can shop for. If you have your favorite settlement company, you can always say, this is what I want, who I want to use.
Right. And I
Yeah.
just want to add, yeah, you do have the right to shop for some things. But keep in mind that sometimes there's a reason it's cheaper. If you're just looking at cost, not to say, agents do recommend, a home inspectors and other type of inspectors and surveys and all that. Usually though, they're, and I know this from experience, they are recommending them because they know they've gotten good results with these people in the past. So, again, sometimes you don't have a good relationship with some of these vendors or recommendations. I mean, that's occasionally going to happen, but if you don't know what you're looking for, but you see something that has a lower price, you just really want to, you want to do your homework. I just want to throw that out there.
Thanks, Kelly.
I have another question. What are the long-term implications of rolling closing costs into your loan balance?
Long term, in terms of like how long would it take to recoup the closing costs, I would say depending on the loan amount, typically I would say anywhere from a year to 2 years, to recoup your costs.
And then how do lender credits or points show up in the final loan paperwork?
On the closing disclosures at the very bottom, and I believe it's on the second page. It does shows on the bottom lender's credit, and it just kind of the amount is deducted out of your total cash to close. Let me see if I can find a
Sorry, I
slide.
was trying to pull it up. Is it on page 2 under other costs, or is it
I think it's on slide number 10, Carrie.
right here? Lenders
No,
credits.
no,
Sorry,
right here, right here. Nope.
let me go to 10 and I'll pull it up.
Yeah.
There we go.
Yes, right here, where it's a lender's credit on the very bottom. If there is a lender's credit amount, it should show up here. Do you see it?
In section J.
Yes, I believe it is.
Yeah, let me.
Yes.
Yeah.
The very bottom.
Yes, yeah.
Mhm.
Yeah.
And actually, while you guys wrap up on questions, I'm going to stop sharing the PowerPoint, but I want to share this tool that the Consumer Financial Protection or agency, whatever it's called, the CFPB offers the Closing Disclosure Explainer. It's really great. So if you don't mind, while you guys wrap up, if you see weird things going on my screen, that's why. Okay.
Kim and Kelly, let me help me solve a myth. I heard this before. I don't know how accurate it is, but I just, that's the reason why you all are the experts and we're asking these curiosities and questions. Somebody told me that, let's say, for example, this person is married, they bought their home with their spouse, and then a few years later, they can qualify to be first-time home buyers again. Is that accurate that after a certain years you can be another first-time home buyer, or can you only be a first-time home buyer once in your life? How does that work?
I'm gonna
I
leave.
can
Perfect.
answer. And Kim, do
Thanks,
you
Kelly.
know? Okay. First of
I
all, it
don't know.
depends on where you live. Okay. They have these programs. They're usually county or city. And in my experience, they're all different. They have sometimes different programs they're offering at different times, and they're all kind of like grants. And so they're all different. The thing is, to answer your question, with some of them, yes, you could in a few years do another one, but here's the caveat. You can't still own the original property. And yeah, so I mean, it truly is for somebody that, and normally if you were in it before, and also the restrictions too with qualifying for them. So, in a few years, you may not qualify for that program because your income's too high. They don't want people using it for investment properties, and that's why they do that. But there are situations where you could be approved for one again, and that would be normally a divorce. When you bought the home, you're no longer you no longer own that home anymore, and you don't have the same income, or or some type of circumstance like that. You took a large salary cut and you had to sell that home, and so after so many years, yeah, you would qualify for a first-time homeowner again. So I think that's the distinction. It just, it's usually a reason where you are, if you're going to get another one, you're essentially starting over again.
And I think to emphasize your point, Kelly, thank you very much for that explanation. She was talking about different scenarios, different restrictions, different conditions. Make sure that you read the fine print because they might tell you like in big letters, like, hey, you can be a first-time home buyer again. But then it has those restrictions like Kelly was talking about that it might imply specific information. So, and that makes sense because the person was up here, what is in Virginia, and then I think they qualified for something. I think it was in another state like Florida, if I'm not mistaken. But it's one of those things that it created my curiosity. But just to emphasize what Kelly was saying, make sure that you read all the information thoroughly before you sign any paperwork, especially when it comes to closing costs and getting into loans and mortgages and things like that. So thank you very much for that, Kelly. And then I believe Carrie's gonna share something on her screen. So go ahead, Carrie.
Oh yeah, thanks. I won't take up too much time, but I'll send the link to everyone. I just found this really cool. Like this is the breakdown of the closing disclosure. So this is the first page, as we know. You can just click on it and it'll tell you more about it. and then a link to learn more about it. It does every page, 1, 2, 3, and it just gives you definitions. Like, it was really cool. One of the better tools they offer, in my opinion. But yeah, so I'll share the link if it'll be helpful to anybody. See, that was it.
That would be very helpful for a lot of people, I'm pretty sure. And again, I know that for many, just looking in and see the amount of paperwork that goes in when it comes to a real estate transaction, is what pretty much can add a lot of fear to most people that are in the fence whether or not they want to buy. But again, as I stated at the beginning, about finding the right partners in order for you to make that, pretty much what it will be your biggest purchase in your lifetime. So again, once you know that you have the right people in your corner, going through this process will be a lot more seamless, if you will. But it's important that you have all the resources available to you so that when you're sitting on that table and you're given a couple of pens just because you might run out of ink, don't be scared. It's not that bad. But again, if you have any questions, please give us a call. As Kelly mentioned, we have two amazing senior loan officers here, mortgage loan officers at the United States Senate Federal Credit Union. Kim and Jeremy, they have an amazing, lots of years of experience, and they will answer all your questions. So please pick up the phone, call us. We'll be more than happy to, they will be more than happy to assist you and walk you through this journey of becoming a homeowner. Or if you are looking to add another property, we can also assist you with that. So again, Kelly and Kim, thank you as always. We appreciate you coming in and providing this presentation to us. Andrea, Eddie, and obviously my Kim Friendly, thank you. But and with that being said, I don't want to let you all go until before I invite you all again for our next webinar next Wednesday. It's going to be on senior scam alerts. Kind of goes hand in hand with what Kelly was talking about, some of the different scams. This ones that we're going to be discussing next week is actually the ones that are targeting our senior citizens. So what to know and how to stay safe when it comes to those type of scams. Please spread the word, help us spread the word. This presentation will be sent to everyone by the end of the week. So keep an eye out on that as well. And I'm pretty sure we're also going to have a recording of it on our website and also on YouTube. So again, thank you all for joining us. Eddie, you want to bring it home and any closing remarks on your end, sir?
Yes, looking at the closing disclosures brought me back to memories because when I first came to the back office, I used to work with the lending department, so lending will always be home to me. So Kim and Kelly, thank you very much for sharing your wisdom with us, especially with this topic. Also, I wanted to mention that some of us next Wednesday will be at Nationals Park for the Congressional Baseball game. So if you happen to be at the game, please stop by our table, come saying hi, come grab some merch from us. And we're excited to, interact with members that will be attending the game. But once again, thank you, Kelly and Kim, for taking time, to share this information. The marketing department, you all know that, I work with the best marketing department, and I'm so blessed to be part of, that team. And the membership development, it's, the partnership that we have created, it's amazing. And for those that attended the webinar this evening, thank you very much for supporting it, because we have said this so many times. I'm gonna emphasize that again, that without you all attend this wouldn't be possible. So this is just to show you that we're just regular people trying to make sure that we serve you all as our members, and we help you build that path to reach your dreams and goals financially, of course. With that being said, have a great night, and thank you very much for joining us this evening. Take care, everybody.